here today with us. As mentioned, my name's Kathleen Coviello. I work at the State Economic Development Authority, and we're really excited about sharing some time with you all to talk about a momentum and a shift that we're seeing in New Jersey, really through the governor's leadership on how we bring more capital to New Jersey. So we know a key component for any entrepreneur is raising capital. And we know not every entrepreneur needs the same kind of capital. They don't need the same type of advisor. And when we're meeting with entrepreneurs, I tell them, listen, this is a marriage. You're going to be with these folks probably 5, 7, hopefully not 10 years. But you know, it's a lot of time together, right? So you've got to pick a good partner. Well, our team at the EDA has been busy picking new partners. The governor's economic development plan really had a goal to raise New Jersey's stature in innovation. And again, a key component to that is driving more venture capital into the state. So the team's been busy. We've added 16 new partners, venture capital firms, to our roster who we work with in the state. And many folks might have heard about our Edison Innovation Evergreen Fund. Anybody in the room hear about that? Okay, I got one. Got two. Esther, I see my hacks friends in the back. They better know about it. There we go. So it's a pretty unique platform that we at the state raise capital through an auction. We then have selected 10 managers so far with a growing roster to invest those dollars on our behalf. What we do is we match any investment 1-to-1 up to $12.5 million into a New Jersey business. So what we're saying to entrepreneurs and investors is we allow you to double your investments in New Jersey companies, and to the entrepreneurs, you know, you get 2 times the bang for your buck if you're a New Jersey entrepreneur working with one of our qualified partners. So that's one of the mechanisms of our 16 new partners. 2 of the other key components has been using state money and federal money to bring on more diverse managers. So our statistics are still pitifully sad relative to supporting diverse entrepreneurs, and the numbers have gone in the wrong direction in the last year, which is why we know it's so important to make sure that we're intentional and thoughtful when we are deploying capital to new partners. And over 60% of the partners that we've selected in our new funds either are run by diverse managers or have a specific focus on investing in diverse entrepreneurs. And so you're going to hear from our partners here a little bit about that. So with no further ado, I'm going to turn it over to Rachel Brink from Red Bike. Really excited to have Rachel here with us. She was an operator herself, so she's been in the shoes of many of you entrepreneurs in the room. She was part of the founding team at Scentbird, and that helped shape her management and focus in Red Bike. She's going to talk us through her experience and how that shaped the structure of the fund and its commitment to New Jersey entrepreneurs. And just before I turn over to Rachel, a couple of the other names I'll share with you that we've invested in. Conscious Venture Partners, Include Venture Partners, and Tail Venture Partners. So you're going to hear about 2 of our 16 fund partners today, but if you are an entrepreneur in the crowd looking to raise capital, make sure you connect with the State Economic Development Authority. My colleague Emmanuel Esochai in the corner there with his camera is the point person for y'all to reach out to. So Rachel, would you start us off, please?
Sure. Hello? Hi, everyone. Gosh, the helicopters are tough, so I'll speak up. But thank you very much for having me. Thank you very much for supporting us, for entrusting us with this incredible initiative. I can share a little bit of my own journey of Red Bike Capital, and then I'll close it off with the incredible work that NJEDA is doing with the Black and Latino Seed Fund, and talk to you a little bit about the type of startups that we're looking for, because we're really excited to meet and support New Jersey-based entrepreneurs. So first of all, I'll give you a little bit of background on myself. Hello, my name is Rachel tenBrink. I'm general partner of Red Bike Capital. We're an early stage fund that invests across SaaS, fintech, and health and wellness. Little about my background. I'm an immigrant. I was born and raised in Latin America, in Costa Rica. I came here as a teenager, started my career building billion-dollar brands. I spent 15 years at Gillette, at Estee Lauder, Elizabeth Arden. And then in 2014, like many of you in the audience, I had that itch. I wanted to build something. I wanted to be in technology. I had ideas that could innovate in industries that I knew deeply. And that's how Scentbird got started. Scentbird's an e-commerce subscription business. We were backed by Y Combinator, which is a very prestigious accelerator in the West Coast. We raised $30 million in venture capital, which, by the way, makes me one of 90 Latinas that's ever raised over $1 million. So I know how hard it is. And that's a lot of what I want to talk to you guys about. But, you know, Scentbird was an incredible ride, and if anybody ever wants to talk about maximizing growth and CAC and LTV and all that good stuff, I am so there. Also on the B2B side, anything around business development, these were the areas that I really focused on. But a couple of years ago, I started to think about the impact that I personally wanted to do. And what I really thought about is I love early stage. I love, as a founder, that magical point where you just start to see product market fit and what you can do to accelerate that journey. And particularly, I love working with women and diverse entrepreneurs. I think we have so few role models. We have so few mentors. So for me, that's really a mission. So we started to do a lot of advisory. Next thing I knew, I was in a bunch of advisory roles. That grew into angel investing in myself and my partner here in the stage, the blue shirt. You can go find him too. And that eventually became the foundation of Red Bike Capital. So as I mentioned, we are extremely honored to have been one of the managers that was selected by NJEDA for their Black and Latino seed fund. So I'll talk a little bit about that because I think it's important, and obviously, if you're a diverse entrepreneur, we want to hear from you. But I want to talk a little bit deeper about, you know, what do we look for at Red Bike Capital? How are we thinking about entrepreneurship? Because I think that the timing of this program could not have come at a more critical moment. As Kathleen said, I think some of the gains that were done sort of post-George Floyd, we're actually starting to see them come back. I think that venture capital and getting venture capital funding is just statistically harder than ever. Basically, you're seeing at the seed stage, you know, valuations are down about 20%, so much less bad than the later stage, sort of the C and Ds that are down 50%, but they're still down. But the most critical point is that half as many deals are getting done. Half as many founders are getting funded. And so I think it is so incredibly important that NJEDA is dedicating the specific resources and trusting us as fund managers to identify these great diverse entrepreneurs that are going to build the next best-in-class businesses in New Jersey. So, you know, come find me. I'm happy to, I don't know if we'll have time for questions, but we're so thankful and excited. I think just general criteria for Red Bike is we look at everything sort of pre-seed to A. I would say seed is our sweet spot. In terms of categories, we think a lot about fintech, financial inclusion, payments, embedded finance, alternative underwriting. These are areas that really excite us. On the SaaS side, we're looking at sustainability, supply chain, logistics, AI, data. And then on the health and wellness, we specifically invest on digital health and consumer health. So very excited to meet all of you, and I will let you have some time because that clock is ticking.
So I'm going to turn it over to Squire Servance, who's our next manager. Squire's firm was selected as one of our life science fund managers. So again, we are dicing and slicing the portfolio to make sure that we're accessing all corners of the New Jersey entrepreneurial market. And the fund is quite a unique model. It's not your typical VC fund, but given the significant focus in New Jersey on life science companies and matching up with our goals around diversity and inclusion, to have a firm that focuses on health equity squarely fit within our mandate. And again, another partner we're really excited to introduce to you all. So Squire, would you tell us a little bit about how and why you created the fund, perfect timing, and what brought you here, and then a little bit about how you're going to deploy the capital that the EDA is investing in you.
Absolutely. Good afternoon, everyone. Thank you, Kathleen, and the NJEDA. I truly appreciate your support in helping us, invest in health equity specifically in New Jersey. So I'm the founder and managing partner of CeX Bio. CeX Bio is an impact-minded life sciences venture firm. Our mission is to accelerate health equity. And what that really means is our goal is to invest in therapies that treat diseases that disproportionately impact an underserved population. So we're like traditional venture firms, but we start with where is there a big health disparity? It could be lupus, sickle cell, it could be some rare diseases, it could be diabetes, but we identify where there's a big health disparity, and then we deploy capital to get new treatments into that space for that specific disease. I'm born and raised in New Jersey. My mother's from Newark. My father's from Patterson. I grew up in South Jersey in Sicklerville. Went to public schools, graduated from Rutgers. I was trained as a biomedical engineer and a neuroscientist. Ultimately transitioned to practice law for a number of years. Did a number of deals, probably over $6 billion worth of deals in this space. And my last role was a general counsel of a public company in Boston, a life sciences company. And going through and doing deals throughout my career, we got to see where the power is, where the true innovation was happening, and it was happening on the investment side. The people that controlled the dollars were controlling where that money was going and what things were getting invested. And to me, during COVID is where we really kind of came together on this idea. Now, as Black American growing up here, we always talked about health disparities. It was common, it was understood. But then COVID happened, and it was national coverage, right? The curtain was ripped. It wasn't just our discussion that we were having, at my kitchen table. It was on the national news, global news. And at that time, I had an idea to try to figure out a way how we can harness capitalism and direct it towards health equity in a meaningful way to try to close health disparity gaps. And that's what we did. And that's the why I'm passionate. I wake up every day excited about what I'm doing and how we can help close gaps. We have a number of great opportunities. NJEDA has been great about sourcing companies through us and us looking at different opportunities. And I know I spoke with a number of folks here already, and we're just excited to go out and do the good work and really do good and do well in society.
Great, thank you. And what kind of deals would you like to see people come to you with, Squire?
Absolutely. So we have, I would say, it's a differentiated approach. What's going on, man? Good to see you. I haven't seen this gentleman in probably like 10, 50 years. We went to college together, so it's good to see. But we focus on venture creation. So what we try to do is identify the specific technology that we're trying to, that can have that impact that we're trying to focus on. And we try to acquire it. We build a company around it. We deploy capital into it. We leverage our networks to really help it grow. I say it's a differentiated strategy. It's not necessarily new. There are other funds that go about this approach. But when we felt the way we felt, one reason why we started in this path was because we wanted to have really a lot more control over how that gets up and a company gets up and running, make sure it has a strong team to really make it progress and be successful in the long run.
Great, thank you. So you are both first-time fund managers, and you both have gone through now the hurdles of fundraising, right? So how does that differentiate you as an investor working with entrepreneurs who are fundraising? Rachel?
So I think for me, it was a very eye-opening experience because I had fundraised as a founder, and realizing what the criteria, what the process, what the diligence is as a fund manager was actually really interesting. And I think that it also crystallized a lot of clarity around what fund managers are looking for, because what are we reporting to our LPs, right? In a way, we all have, somebody that we're reporting to. Entrepreneurs might be the CEOs, but they have investors. Funds might be running funds, but we have LPs. And so we each have responsibility, and I think being very crystal around what are the KPIs, what are the metrics that we need to do. So for us, I think with NJEDA, there's some very clear metrics around ownership, around companies that are building jobs in New Jersey, that are building businesses in New Jersey, that are things we look at, as well as the typical, profitability and revenue, and does this model make sense, and can we exit for an attractive multiple? So it's been really interesting and really differentiated. And I'm very thankful for the opportunity to be driving capital to this great community.
And I've angel invested for a number of years, and so I was always looking at different opportunities and pressure testing different teams and technologies. And but now going out and raise money on our own, the principles it's the same, right? I call it the 3 Ps. It's pennies, like how capital efficient are you as a company? People, do you really have a strong team that can take the product across the finish line? And then the product. And if those things are in any venture or any company that's looking to raise funds, and those are you have really strong arguments for each one of those different points, you'll have a strong chance with us. And similarly, with when I'm raising capital now, it's the same concept. When I'm talking to LPs, institutional investors, they're looking for those same things. You have capital efficiency. Do you have a strong team? Do you have a strong product? The product really is your track record and your team. So those are it just crystallized what I've kind of seen over the years as an investor, and really now doing it on my own.
Great. So funny, we have 3 T's. We have team, TAM, and traction.
There we go.
So I guess everything goes in 3s.
Absolutely. So I said to folks, this is a marriage almost. You're with somebody for a long time, right? So as you've switched sides of the table, what advice do you have for the entrepreneurs that are looking to raise capital to understand now from the perspective of an investor?
So I think something you said earlier in the presentation around sources of capital is a really important conversation for founders. The way I explain it is I sell rocket fuel, and if you're not building a rocket, I may just kill your engine, right? So I think it's really important to think about what type of business you're building and what type of capital is the right capital for you. Because certain businesses, the size of businesses that venture looks like the scalability of those businesses is very specific. And you might still build a very sizable business, a great business. It's just not a venture scalable business. And I think that what I often see, and frankly, particularly among diverse entrepreneurs that are really struggling to figure out how to even get started. And you kind of hit your head against that wall over and over again. And sometimes it has to do with the fact that the type of business you're looking to build is not the right type of business for venture. There's a whole lot of other reasons, which we can get into. But one of the reasons that you really need to think about is, we're looking for businesses that can scale to 100 million, that can really be sizable. And so there are businesses that might look for loans, that might look for other programs that, some of the programs that NJEDA was talking about, that might be better suited. So I think it's really important for founders to understand and right-size their fundraising to the business they're building.
Yeah. And I'll say this is just generally applicable to any company that's raising money, and it's a tough environment right now. I would say stick to the fundamentals. right? I'm in the life sciences space, and you see, the public biotechs took a hit. But the reality is the fundamentals are still strong. There's still a lot of innovation. People are really focused on, if you talk about those 3 Ps. So really stick to the fundamentals as you continue to grow and looking for fundings, particularly in this market. And then I would say, just be consistent. Raising capital, building a company is tough. It's difficult. Every day you need to wake up and try to get a small win and be consistent every single day. And if you do that in the long run, you get 365 wins every day, then you're going to start to build momentum, and then the universe will start coalescing around you, and I guarantee you'll see opportunities become attracted to you.
And I'll just add on, so we know this is a struggle for a lot of folks. We want to make sure that New Jersey entrepreneurs have a proportionate advantage in fundraising. And so if folks aren't aware, we run a speed dating event of sorts twice a year called New Jersey Founders and Funders, which every New Jersey registered business is welcome to participate in. Our next one is November 2nd in Newark, and you can register on our website. So going to give you a little bit of a plug there. And again, most entrepreneurs that day meet with somewhere between 7 and 10 VCs in one day. We even give you lunch and talk about all the other great resources from the EDA. So I want to make sure everyone's aware of that. The clock shows 3 minutes left. I think we might have time for 1 or 2 quick questions if there's anybody in the audience that has a question. They're going to turn you on. Mm-hmm.
It's okay. It's okay.
I can hear you.
Yep.
A lot has been made of kind of the tech flight that's left the Bay Area, San Francisco in particular. I am wondering if, and I think this is maybe mostly for you, Kathleen, a question, any intentionality in terms of how can we start to, we know there is a flight out of one major tech hub.
Yeah.
What can we do to specifically go after these entrepreneurs that are leaving that area, and businesses specifically, and getting them to say, hey, not California, New Jersey?
Yeah, that's a great question, and thanks for teeing that up for me. So actually, the governor and Tim Sullivan, the CEO of the EDA, were out in California just a few months ago knocking on doors and telling folks, we've stood up this Evergreen fund. We're going to give you double the capital to invest in New Jersey businesses. Squire and I were just talking about the flight out of Boston that we're seeing, right? There's too much competition. People can't afford housing. I was at the International Bio Conference in Boston in the spring telling folks to come here. So we are shouting from the rooftops. Interestingly enough, on our Evergreen Fund, we've approved several California managers. So the West Coast managers are saying, listen, the market's too saturated. We're looking for reasonable valuations, and we're looking for scrappy entrepreneurs. And when we look at what's happening on the trends in New Jersey, we've risen from 20-something in states that raise venture capital to number 9. In the last 5 years. So we're pretty excited about that momentum. We want to see it continue to happen. Relative to exit multiples, we're in the top 5. So we're messaging that directly out to all of the firms to say, it's an opportunistic market and ripe for investment.
Yeah, and I could add it. I moved from Boston area to New Jersey because of the New Jersey ecosystem, right? They have top-notch universities, and I'm in the life sciences space. You have 13 of the top 20 big pharma companies have presences in New Jersey. You have the Department of Labor, that's amazing. You have the NJEDA, which has a ton of programs. New Jersey has an amazing amount of opportunities to help entrepreneurs grow. And look, I was just telling Kathleen, I am a big mouthpiece and proponent of New Jersey and what they're doing. Because it's really doing an amazing, they're doing an amazing job, and kudos to the NJEDA and the governor for that.
And what I'll add to that, I think to your point, I think there is opportunistically a moment in time right now where, frankly, I was talking to a young Stanford grad yesterday, and he's like, I don't want to live in San Francisco, and I don't want to live in Mountain View. right? Like, I don't want to live in the burbs, and I don't want to live in San Francisco. New York's too expensive, but Hoboken's amazing, and he moved to Hoboken. So I do think that there is sort of a natural evolution of young talent that's sort of doing the math, looking at the opportunity, and makes me very bullish.
So that's a great question to wrap us up on. Thank you so much for that. My colleague, Emmanuel Esachai, is here from the EDA. He's our Senior Diversity and Finance Officer. Kudos for Emmanuel. If you're looking for help, if you're an entrepreneur, go see Emmanuel. He'll help guide you through the mirage of the EDA. Thanks, everyone, for your time and interest, and have a great conference today.